Let's go to Keith in Philadelphia. Hey, Keith, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. You having a good day out there?
Yes, sir. Yes, sir. So, a couple things, Tom. Number one, I started listening to you in 2001 and never stopped. Yep. And I owe you a lot, my family as well. Okay, this is the first time I'm calling.
I appreciate that, man. Thank you so much.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Always do your best, but don't overdo. Always do your best, but don't overdo. When you overdo, you deplete your body, and you go against yourself. And it will take longer to accomplish your goal. Market-wise, let's take a look at it out here. We had the Dow Industrials down 190, NASDAQ off 46, S&P's off 20, gold contract down 1770, trading at 1,764 an ounce. Silver off 77 cents at $33.68 an ounce. Platinum down 20 at 1,619 an ounce. Copper off 3 pennies at $3.46 a pound. Light sweet crude up $2.47, trading out at 101.84 a barrel. Bonds up 30 ticks at 142.14. Dollar index, King Dollar up 38 ticks, trading out at 78.45. Euro down 71 at 134.68, and the yen flat at 77.03. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Wild day out here today, folks. It was quite a ride. Started out at the low end, got up to the high end, and basically the market gave it up coming into the close. You're down 20 bucks in the S&P, you're 1236. You did 900 million shares. Now, that's not a lot, folks. What you will see is that we'll get down to the 1226 tomorrow, and how you get the expansion in volume will tell us, does that baby want to go downtown right here, right now? I expect it does. The reason I'm saying that is this. What the market has done is this. The market is trying to get up and into the supply line from January until August. It hasn't been able to make it. It's up at that supply line with 700 million shares. It's been up there, folks, and tried to get up there. We're talking about almost 2 weeks solid each and every time. It tried to get up there again today. Didn't make it. But check it out. When you come into large downdrafts, or updrafts in that matter, okay, what happens first is that you normally go the opposite way of the move, and then the vengeance comes. That's what I expect we had happen today. It started down, went up, got into that, and then all of a sudden just fell apart. And we'll know if you have a continuation of it tomorrow. You have a continuation of it tomorrow with heavier volume, you'll go to the bottom of the range. Now, I want to show you this works on both ways. And the reason I'm going to go over to the dollar, I will show you what happened with the dollar before the dollar took off again. When the dollar first took off, folks, the dollar, huge price expansion, volume, conviction, everything on September 9th. Takes off upside, right? Starts out at 76, gets all the way up to 80, right? 3, 4, 5 weeks. Well, before the dollar started this move, it was a vicious shakeout. The dollar went from 76.46 down to 74.86, and it did it in one day. That's the correlation on the other side. Bang! Down, fast, furious. In this case, no volume on the way down. Take off, wide price acceleration. Once again, what does the dollar index do today? Dollar index closes over the swing point. That swing point we're talking about is 78.42. Now, we only had 26,000 contracts versus 36,000, so it needs more volume. Closed over the price. Bottom line, that's saying you'll go into the 80.43. Let's go to the Dow Industrials. What you have happening in the Dow Industrials is this. Dow Industrials come downtown, $1.90. You're going to be heading for the lower end of this consolidation here. The Dow Industrials are still in the higher range, higher consolidation range. There's two consolidation ranges. The lower one is 11,712 down to that 10,400 area. Once you get back inside, and this will go for it tomorrow, it'll go for the 11,716 tomorrow. And if you had an acceleration in volume, watch out, because, well, NASDAQ composite. Let's go over to the composite. What we have with the composite, she came down 46 bucks. She did 1.9 billion versus 1.7. Composite, right now, the way it stands is the composite is in the lower consolidation. That's saying the NASDAQ wants to move into the 2406 area. Okay, the Chicago Merc. Let's go take a look at the Chicago Merc. What came out this morning, folks, is this. The Chicago Merc is the regulator for the futures market, was the regulator for MF Global. Well, what ends up happening this morning, Chicago Merc in the New York, in the Wall Street Journal, it comes out that the Chicago Merc knew that MF Global was shot by not $600 million, but by $900 million, and that there were wire transfers that came out. So I'm going to walk you through this slowly, okay? At this point, in the public arena, for you and I, okay, as to what public information is out there, whether it's the regulators, whether it's the trustee of the bankruptcy, they're saying that there's 600 and so much money, 600 and something million missing. What the CME came out with, well, let's put it this way: it's on Bloomberg, it's in the Journal, is this, and this is a lot heavier, and this is what this is, folks, is that there was an actual wire transfer out prior to the bankruptcy, and that wire transfer that went out, basically there was $900 million missing. Now, what I read out of that, what I get out of that is this, is that they're claiming they don't know where the money is in one aspect, but yet the CME comes out and says the wire transfer, so they know where that money is. The real question is, was that money used to cover a call, and now the battle is on as to, number one, was that illegal? Number two, is that money ever going to come back? And number three, which is, to me, is the biggest one, all you actually have is bureaucrats covering bureaucrats' butts. Bottom line, CME opens up. What does CME do? Goes down 16 bucks. Now, you come down with big volume. The CME is in trouble here. Okay? CME is down 1.8 million shares. It's going into 1.8 million at 239. Now, we bring this back, and this is so sad, it's sick. Because the way the law is read, folks, the securities law, if in fact the CME knew 24 hours before they informed the CTFC, it is absolutely illegal, flat out. Bottom line, as soon as you know that something like that, you're supposed to be on the phone and tell them this was 24 hours later. Well, anyway, the market took care of them today. The market was selling them off in a big way. Now, the problem lies that you're at 241. It wants to get down to this 234 area. You break that with volume, you're going to see the CME down at $1.80. You know, so there's big action out here. What happened intraday today is that Fitch came out in the middle of the day and basically said that our banks will, well, let me read it to you. So, okay, so let's see. Fitch warned that if the markets in Europe don't get it together, that our banks are at risk because of the amount of trades that they have on. It's actually not the amount of trade so much, folks, as is the insurance policies that they've sold to other banks and or nations for default insurance. This is going to all go back to default insurance again. And of course, the ironic part about it is that the default insurance in Greece, they're not going to pay on it. So imagine you bought insurance that Greece wouldn't default. Greece is going to, it's a 50% haircut. And what the Derivatives Association is saying is that because it's voluntary, the insurance can't pay. That's problematic, period. Now, at 0500 this morning, Eastern Time, it was absolutely incredible what was going on in Europe. I'm going to pull up the European bonds, because see this whole deal, folks, you have to just wrap your head around the debt situation for a second. If you happen to be watching Tiger TV, what you're looking at is that you're looking at the bond structure across the world. The first, 10 is North America and Latin America. The next 10 are Europe, Africa, and the Middle East, and the next 3 are Asia and the Pacific Rim. You're looking at the 10-year bond structure and the yields on them. What we had last night is this. Italy, Spain, and France, the yields in the 10-year have been going up dramatically. And I mean like about 15% in the last week. That is something, folks, okay, that those countries can't handle. They can't pay that type of debt. Everyone knows that. But this is what happened at about 0500 Eastern Time. The European Central Bank came in and bought bonds in Italy, bonds in Spain. Now, when that happened, folks, okay, that'd be just like our central bank coming in, buying, right? Of course, when they're buying, you don't get in their way, right? Well, bottom line, they bought. What that did is this. Brought the yields down immediately, ASAP. It brought the DAX up, the FTSE up, all the European markets went up 1%. Well, guess what? Some monster on the other side, and there's probably a lot more than one monster, and when I'm talking about monster, I'm just talking about a large operator, which is going to be another bank, another broker-dealer. They gave it to the European Central Bank like probably Soros and Jim Rogers gave it to the Bank of England, it'd be 30 years ago. And if you didn't know, they busted the Bank of England. Someone gave it to them this morning. And what it was is that they sold right into them. And the central bank, the European Central Bank, couldn't hold the rates. So what ended up happening? The rates in Italy, the rates in Spain went all the way right back up, and then the rates in France actually got higher. That was the signal, and that's a huge signal, folks, that they got big problems, because picture what it's like. When you take an action, you have to make sure that you are going to win. It's like you don't ask a question unless you know the answer. You don't get into a fight unless you know you can win, okay? Bottom line, they made a huge mistake. They're going to pay for it, and they're going to pay for it in a big way. That's what you're seeing out here, folks. And you see it in spades. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. We have the Dow down 190. NASDAQ off 46. S&P's off 20. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2000.